In 1958, Congress quietly inserted a provision into the tax code, and the IRS has spent 66 years making sure most business owners never find it in time. The provision was designed to let you keep tens of thousands of dollars a year, legally, in plain sight. But there's a window, and the window closes, and almost nobody tells you when. The S-Corporation has existed since 1958. That year, Congress passed the Small Business Tax Revision Act and created something called Subchapter S, a special designation that lets a business pay its owner a salary and then distribute the remaining profits separately. That distinction matters, because salary gets hit with self-employment tax. Distributions don't. The rate is 15.3%. On every dollar of salary, you hand 15.3 cents to the IRS. On every dollar of distribution, you pay zero. A business owner clearing $200,000 a year can split that income, pay the tax on part of it, and legally shield the rest. That's the mechanism, that's the structure, and it's perfectly legal. Here's where it gets strange. To access that structure, you have to file a single 2-page form, IRS Form 2553. It declares that your corporation or LLC wants to be taxed. As an S-Corp, you have 75 days. 75 days from the date you form your business to file that form. After that, the election closes. You default to a different tax structure, and you start paying the full rate on everything. Most people find out about the S-Corp election from an accountant if they're lucky, if they hired one, if the accountant mentioned it. Millions of business owners form LLCs every year without ever hearing the words Form 2553. They hit the 75-day mark without knowing there was a clock. The IRS tracks the filings every season. In 2022 alone, 6.1 million new business entities were registered in the United States. The majority never filed Form 2553. The majority never knew they needed to. The official explanation is simple. You missed the deadline. You're out. The IRS publishes the rules. The form is available. It's your responsibility to know. That's what the system tells you. But here's what the system doesn't volunteer. The deadline doesn't mean what you think it means. In 2013, the IRS issued Revenue Procedure 2013-30. It's a technical document, 37 pages, the kind of thing that never trends on financial news, the kind of thing your banker has never mentioned and your tax software doesn't flag. Revenue Procedure 2013-30 changed everything. It stated in precise legal language that a business could file Form 2553 years after the original deadline and have the IRS accept it, retroactively, as though the election had been filed on time. Now watch what happens next. The provision wasn't new. Late relief for missed S-Corp elections had existed in various forms since the 1980s, but 2013-30 consolidated and clarified it, made it cleaner, more accessible, and then almost nothing happened. Because the procedure requires something called reasonable cause, the business owner or their representative has to explain why the election was missed, and that explanation has to be accepted. Here's what reasonable cause has included according to actual accepted filings. The owner didn't know the election existed. The owner received incorrect advice from a professional. The owner was dealing with a health event. The owner simply didn't understand the filing requirement. Not knowing. That's been accepted. This is the part that should stop you cold. The same institution that collects the tax has, in writing, acknowledged that not knowing about the requirement is grounds for relief. They have accepted those explanations. They have approved retroactive elections going back 3, 4, even 5 years. The average late filer who successfully uses this procedure recovers somewhere between $12,000 and $60,000 per year in taxes they should never have owed. Per year. Going back to the original missed window, that money was sitting in the tax code the entire time. Legal, available, just not announced. Think about who benefits from the silence. The IRS collects more when fewer people file Form 2553. Every business owner who defaults to standard taxation and pays the full self-employment rate on every dollar of profit, that's revenue the system keeps. The late relief provision exists because the law required it, not because the system wanted it found. And accountants, the people you'd expect to surface this, are not immune to incentive. A professional who failed to advise you about the S-Corp election in year 1 has reason to stay quiet about the backdated remedy in year 4. The structure was designed in 1958 to help small business owners. The deadline was written in a way that most people miss it. The relief was published in a way most people never find it. And the gap between those three things, design, deadline, and remedy, has quietly redistributed billions. So here's the question that remains. If the IRS has a formal written procedure that allows late elections, and has accepted I didn't know as a valid reason, why has no one with a platform ever said this out loud before now? You have a window that never fully closed. The question is whether anyone told you that in time.